All right, so we've got this latest financial report from Nike,
Okay.
right? Their fiscal year 2025 third quarter results. And like everybody's talking about it.
Oh, yeah, it's making waves, big waves.
But, we're not going to just like read you the numbers and be done with
No,
it.
nope, numbers are just like the starting point.
Exactly. We want to go deeper.
Way deeper. Like, what's the real story here? What's going on with Nike?
Yeah, what are the trends, the challenges, maybe some hidden opportunity?
That's the good stuff, right?
Absolutely. So, first things first, the big number, the one everyone's talking about. $11.3 billion in revenue.
Sounds massive, right?
But there's always a but, isn't there?
Kinda, yeah. Because last year, same time, they were doing better. Like, a lot better. This $11.3 billion is actually down 9%.
9%. Wow, that's not a small dip.
Not at all. And even if you take out all of the currency stuff, all those exchange rate fluctuations, it's still a 7% drop.
Currency neutral, as they say.
Precisely. So, yeah, their top line, it's shrinking, not growing like they want it to.
It's not good. And what about the bottom line? The profit, the net income, how did that look?
Not so pretty either.
Hit me with it.
Net income came in at $0.8 billion, which again sounds like a ton of money.
It does.
But it's actually a 32% decrease from last year.
Ouch. So they're not just selling less, they're making less on what they are selling.
Exactly. And that flows right down to earnings per share, too. Down a whopping 30% to the $0.54 per share.
All right, so the big picture's pretty clear.
Yeah. Not exactly a victory lap.
Not yet. Revenue down, profits down.
Yeah.
So let's zoom in. Let's focus on the heart of it all, the Nike brand itself. What's going on there?
Well, they pulled in $10.9 billion in revenue for the Nike brand specifically.
Which tracks with the overall company decline, right? Around 9% or 6% currency neutral.
Spot on. And what's really striking is that it's not just one region dragging them down.
Oh.
Every single geographic region they operate in saw a decrease in Nike brand revenue.
Whoa. So it's not like, oh, China's having a tough time or Europe's slow.
Nope, it's across the board.
That suggests some pretty serious headwinds, right?
Big time. And it gets even more interesting when you look at how their different sales channels are performing.
Right, because Nike sells in a lot of different ways,
Yeah.
right? Direct to consumer through their own stores,
Yeah.
online, but also through other retailers.
Exactly. And their direct-to-consumer business, which they call Nike Direct, brought in $4.7 billion this quarter.
Still a big number, but
But yeah, another but, it's down 12%, or 10% if we factor out currency.
so even their direct connection with customers is sputtering a bit.
It seems so. And if you look closer at Nike Direct, their online sales, Nike Brand Digital, they took a real hit, down 15%.
15. That's a big drop for online, especially when so much of retail is moving that way.
No kidding. And even their physical stores, the ones they own, they saw a dip too, though smaller, 2%.
Huh. So not just a digital problem.
Apparently not. It's like people are, I don't know, hesitant to buy directly from Nike right now.
Interesting. And what about their wholesale business? The stuff they sell through other retailers?
That totaled $6.2 billion, which, again, sounds huge, but it's actually down 7%, or 4% currency neutral.
So still a decline, but not as steep as their direct business.
Right. It's like maybe those relationships with retailers are a little more stable, I guess.
Maybe. It's something to watch, for sure. Now let's switch gears and talk about Converse, those iconic sneakers. How are they holding up?
Not great, to be honest. They brought in $405 million in revenue,
Which is?
down 18%, 16% currency neutral.
Yikes. So both Nike and Converse, revenue shrinking across the board.
Yeah, not a pretty picture. And this all leads to a really important question. How profitable are these sales anyway? And that's where gross margin comes in.
Gross margin, tell us about it.
So gross margin is basically what's left over after you pay for making the stuff you sell. And Nike's gross margin took a pretty big hit this quarter. It decreased by 330 basis points.
Which for the non-finance folks out there means?
It means it dropped 3.3 percentage points down to 41.5%. And there are a few things driving this.
Lay it on us.
They're having to offer bigger discounts to move product, which eats into profits. And they've increased their reserves for inventory obsolescence.
Meaning?
Meaning they might have a bunch of stuff they can't sell or they're worried about not being able to sell. And then on top of that, their production costs, the actual cost of making their shoes and clothes, it's gone up.
Yeah, we're seeing that across a lot of industries. Inflation, supply chain issues, it all adds up.
Absolutely. And finally, they also mentioned changes in their channel mix, like where they're selling their stuff is impacting their profitability.
So lots of factors pushing that gross margin down.
Yep. But there's one thing that partially offset the decline.
Oh, a silver lining.
Sort of. Remember those restructuring charges they took last year?
Vaguely. Remind me.
Basically, they had some one-time costs related to, like, layoffs, maybe closing some stores.
Right.
So because their profits were lower last year due to those charges, this year's numbers look a bit better in comparison.
Ah, so not all bad news.
Exactly. It's all about context, right?
Always. So let's move on to expenses. I'm seeing a few different types of expenses in the report. What are we looking at here?
Overall, their selling and administrative expenses went down by 8%, landing at $3.9 billion.
Okay, so they're cutting costs somewhere.
They are. But if you break it down, there's a bit of a split.
How so?
Well, their demand creation expense, which is basically their marketing budget, that actually went up.
Up. But sales are down. Seems counterintuitive.
It might seem that way, but it's a pretty common strategy. If sales are slowing, you got to get your name out there more, try and attract new
Makes
customers.
sense. How much do they spend on marketing this time?
It was $1.1 billion, up 8% from last year.
Wow. So they're definitely not shy about trying to get people excited about Nike?
Nope. But they are pulling back in other areas, like their operating overhead expense. That went down 13% to $2.8 billion.
Operating overhead mean?
Like the general costs of running the business. Salaries, rent, that kind of stuff.
Right.
And this decrease, it's mainly due to those restructuring charges from last year and also lower wage-related expenses. So some of those tough decisions they made are helping their bottom line now.
Interesting. So less overhead, but more marketing. Strategic choices. Now, one thing that really caught my eye in the report was their tax rate. It seemed super low.
Yeah, it was only 5.9% compared to 16.5% this time last year.
That's a huge difference. What's the story there?
It's basically a one-time thing, a non-cash benefit, they call it.
Non-cash meaning?
It's not like they got a giant refund check. It's more of an accounting adjustment.
Gotcha.
Basically, there are some changes in U.S. tax regulations about how foreign currency gains and losses are handled, and that gave Nike a big boost this quarter.
So a lucky break, but not something that'll happen again.
Exactly. Now let's shift gears and take a peek at their balance sheet. This tells us about their overall financial health.
Right, like how much cash they have on hand, how much stuff they have sitting in warehouses.
Yep. So their inventory, all the shoes and clothes they haven't sold yet, that stood at $7.5 billion at the end of February,
Which is,
down 2% from last year.
so not a huge change, but it does suggest they're managing their inventory pretty well.
Yeah, they did mention that the mix of products has changed a bit, like maybe they have more of certain types of shoes, less of others.
Gotcha. And cash. How's their cash situation?
Their cash and equivalents, plus their short-term investments, altogether, it was $10.4 billion.
Okay, so still a healthy cash cushion.
Definitely. Though it's down a bit from last year, about $0.2 billion. And they explain that's because they've been spending money on things like buying back their own stock, paying dividends, and investing in the business.
Right, which brings us to shareholder returns. Nike has a long history of paying dividends.
Oh yeah, they're pretty famous for it. 23 years in a row, they've increased their dividend payout.
Wow, so what did they pay out this quarter?
It was $594 million, up 6% from last year.
It was solid. And what about share buybacks? They've been doing a lot of that lately, right?
They have. This quarter, they bought back $499 million worth of their own shares, which took 6.5 million shares out of circulation.
And that's all part of that huge $18 billion program they announced a while back.
Exactly. And so far, they've spent about $11.8 billion buying back 119.3 million shares.
Yeah.
So even with everything else going on, they're still making sure their shareholders are happy.
Makes sense. Now, let's hear from the people at the top. What did the leadership have to say about all this?
Well, CEO Elliott Hill, he talked a lot about their win now strategy.
When now? Sounds urgent.
It is. It's all about focusing on the things that will have an immediate impact, connecting with customers through sports, telling athlete stories, pushing those performance-focused products.
Especially with big sporting events coming up. Makes sense to capitalize on that excitement.
Absolutely. And the CFO, Matthew Friend, he was pretty consistent in his outlook. He said they're sticking to their predictions for the second half of the fiscal year, and that a lot hinges on this win now strategy working.
So they're acknowledging the challenges, but still feeling confident.
Yeah, they're betting on innovation, new products, and reigniting that brand passion.
All right, let's get a little more granular now. We've talked about the big picture, but how does performance vary across different parts of the world?
That's a great question. And a good way to look at that is through EBIT, earnings before interest and taxes.
EBIT, what does that tell us?
It's a way to see how profitable their operations are in each region before factoring in things like taxes and debt.
Gotcha. So what's the regional EBIT picture?
Well, honestly, not great anywhere. North America down 21%. Europe, Middle East, and Africa, even worse, down 35%.
Ouch.
And Greater China, which has been a huge growth engine for them in the past, down a whopping 42%.
42, that's a massive drop.
It is. And even Asia Pacific and Latin America down 27%. So pretty much every major region is struggling.
Not good. But I did notice something interesting in the report. The global brand divisions and the corporate segment, their EBIT actually improved.
You're right. That is interesting. Global brand divisions up 9%, and corporate up a huge 46%.
What's driving that?
Well, for corporate, it's mainly because of those restructuring charges we talked about earlier. They had big costs last year, so this year looks much better by comparison.
The magic of accounting.
Exactly. But it is worth noting that even though those segments are doing better, the overall EBIT for the Nike brand is still down
That much.
41%.
Yep.
And Converse, even worse, down 60%.
So those regional declines are really weighing them down. Okay, let's dive even deeper. The report breaks down revenue by product type: footwear, apparel, and equipment in each region. Plus, they give us those currency-neutral numbers.
Oh, yeah, those are really helpful for seeing the underlying trends, stripping away the impact of exchange rates.
Exactly. So let's start with North America, their biggest market. What's the story there?
In North America, footwear brought in $3.132 billion, down 9%.
Both as reported and currency neutral.
Yep, same decline either way. But apparel actually did pretty well, up 7% to $1.510 billion.
So people are still buying Nike clothes, just not so much the shoes.
It seems that way. And equipment also saw growth, up 10% to $222 million.
So a mixed bag in North America.
For sure. Now, over in Europe, Middle East, and Africa, footwear revenue was $1.742 billion.
And how did that compare to last year?
Down 11% as reported, but only 7% currency neutral. So the weak euro and pound are definitely hurting them there.
Makes sense. What about apparel and equipment in EMEA?
Apparel was down 8% to $913 million, or 4% currency neutral. And equipment was down 15% to $156 million, 12% currency neutral.
So across the board, declines in EMEA.
Yeah, not their best region right now.
All right, what about Greater China? That's such a key market for growth.
It is, and they're really feeling the pain there. Footwear revenue was $1.282 billion, down 17%, or 15% currency neutral.
17%. That's a big hit.
Yeah, and apparel was down the same amount, 17% to $412 million.
Wow. And equipment.
Equipment was basically flat, just a tiny dip of 1% to $39 million.
So Greater China definitely not delivering the good news they were hoping for.
Not this quarter. All right, let's see what's happening in Asia, Pacific, and Latin America.
APLA, as they call it.
Right. Footwear there was $1.052 billion, down 12% as reported, but only 5% currency neutral.
So exchange rates are playing a big role there, too.
Huge. Apparel was down 8% to $358 million, or just 1% currency neutral, and equipment actually went up 5% to $60 million.
So similar to North America, some bright spots in APLA, but footwear still lagging.
Yep. Now, just to be thorough, those global brand divisions, they had $12 million in revenue,
Which is
up 33% as reported, 21% currency neutral, but it's a pretty small part of their overall business.
right. And what about the corporate segment?
That was negative $26 million.
Negative, meaning they lost money there.
It's mostly related to their currency hedging activities, so not really a core operating loss.
Okay, that makes sense. So lots of regional details, lots of product-specific information. But let's bring it all back to those currency-neutral figures for the overall Nike brand and for Converse.
Good idea. So for the entire Nike brand, revenue came in at $10.890 billion.
Down 9% as reported, but
only 6% currency neutral. So the core business is shrinking, but not quite as dramatically as it might seem at first glance.
and Converse.
They landed at $405 million, down 18% reported, 16% currency neutral. So tougher times for Converse, no matter how you slice it.
All right, so for all you listeners out there trying to make sense of these earnings, here's the key takeaway. Nike is facing some serious challenges. Revenue is down, profits are down, and both their direct-to-consumer business and the Converse brand are struggling.
Absolutely. But there are some bright spots too. They're managing costs effectively, they're still rewarding shareholders, and their leadership is optimistic about their win now strategy.
Right. They're focusing on innovation, on reigniting that brand love through sports, on connecting with customers in new and exciting ways.
So it's not all doom and gloom.
Definitely not. But it's a crucial moment for Nike. And here's what I want you to think about as we move forward. What are the biggest hurdles Nike has to overcome to get back on track? And where are the biggest opportunities for them to really win in this ever-changing, super competitive athletic market?
That's the million-dollar question, isn't it?
It is. And your perspective on this is what matters. So keep thinking, keep asking questions, and join us again next time for another deep dive.
See you then.